So, how are we going? We go out as a bank and we interview 1,400 firms across Australia by industry, etc., and we ask them a couple of questions. One, we ask them about, are you confident? How's your animal spirits? And then we ask them, how are you going? So the last observation we've got came out 2 weeks ago for July, and so it's post the elections and it's also post-Brexit. So the dark red line there is business confidence. The dotted sort of fine line is the seasonally adjusted numbers, and the dotted line through the middle is the long run average. So what it says is business confidence across Australia is basically sitting around where it's been averaging for the last 30 years, a bit below, but not a lot. Now that, when I tell people that, they say, oh, I don't believe you, because there's, Brexit and, everybody hates the election outcome, nothing's going to happen in the government. My answer to them, well, it depends where you are, and I'll show you that in a minute, but also it depends on what people's balance sheets are actually performing. So in other words, yes, you can be worried about the external environment, but if you're actually doing okay, you're going to be less worried. So instead of exactly the same graph, this time I'm going to ask people, how did you go? How was your sales? How was your profits? How was your employment? Very different story. Very different story. It's basically, in layman's terms, saying outside of mining in particular, the non-mining economy is growing somewhere between 3.5% to 4%, which sounds a lot, but it depends, again, where you are. So what I'm going to do now is just take the last observation and break it up by industry. So what do I get? Blue is the actual conditions and red is your confidence. So the miners at present are a little bit more confident because commodity prices have gone up. So on the left-hand side, that sort of blue line there is saying the miners still think it's pretty awful. The other sectors that are sort of not doing as well, wholesale. Wholesale is important because what we're seeing is a new dynamic. Currency a couple of years ago was 110 against the US dollar. It's come down to 70 or 75. Normally that would mean that the import price would go up, and we can see the import price across the docks go up, and then we go saying, right, therefore the prices go up. Answer is no, they don't. Why? Because they don't have the ability to pass it on. So what you see is a profit squeeze, particularly in wholesale, but now increasingly discretionary retail as well. And then you've got different movements in construction industry. They're more optimistic. That's mainly the apartment builders. The miners, constructors are still terrible. The sectors that are doing well, if I go over to the right-hand side, recreation and personal services. Now, that is the consumer buying services. It is 1/3 of the Australian economy. It is accountants, it is lawyers, it is education, it is health, and it's tourism. So what I'm saying is they are experiencing boom times. Why? Because the consumer, it's very much driven, interest rates are really low, currency's competitive, manufacturing's starting to do a little bit better, they're pretty innovative, and as they look forward, and it's also very much driven out of the east coast of Australia. In terms of some of the other sectors, finance and property, I can guarantee you it's not the banks. It is more about the property services, real estate, etc. We're starting to see reasonable improvements in transport. We sort of look at that as a leading indicator because you're moving boxes around the place. But again, one of the problems in transport is that profit margins have been sort of crunched. So you see that in terms of where the various industries are, and then you also, I'll flip through, the one there is just sort of a long-term history, so I won't spend a lot of time other than it says the miners are still the equivalent of the bottom of the GFC, and the personal recreational services have been strong for a long time. So what's it mean by region? It means by region that in Western Australia is pretty awful. Also, we know in terms of the timing of some of the LNG platforms, etc., there's probably another 50,000 jobs to be lost in Western Australia. Okay? So they've already lost, they're about halfway through the employment losses. And so if you're trying to, in mining services, you've got a big issue. You've got big issues in terms of house prices over there, particularly outside of Perth, but even in Perth there's big problems. Perth prices, by the way, this year are down about 7%. Okay. And then you get Queensland. Queensland's really mixed. If you're in North Queensland, that's mining, it's disastrous. If you're in the southeast area, southeast Queensland is actually doing a lot better. A lot of growth in apartments. Victoria is doing pretty well, and New South Wales is shooting the lights out. So not only is it a story about by industry, it's by industry, by region. Is really, really important in there.